Thank you, Angel, and Heidi ho, everyone. Welcome aboard. It is Thursday. Hell yes, it is Thursday. Where does that all go? I don't know. I really don't. But gee whiz, I've had a hell of a day. More about that later. It's all about bloody cryptocurrencies. Man, I nearly sacked the word from my vocabulary earlier today. But yeah, it all came out in the wash, as did the Fed statement moved the market as we were anticipating it might. And plan A, I suppose, was exactly what happened. When they stated, I haven't read the statement, but from what I have gleaned, because I've been too busy with crypto today, seriously, what I have gleaned is that the Fed has stated that their I have to choose my words here. They are considering, or will not, or will. I'm not sure what the words we use because I can't tell you that. Actually, I'll bring the statement up at some stage. And they're going to start. Inflation is not happening, apparently. Okay, that's interesting. Let me just have a look at this statement for a second. I'm assuming by what I've read on the headlines that they have said they're going to commence. I'm not sure that's the right word, or consider, or whatever the word is, tightening monetary policy by raising interest rates in 2023, whereas previously they've said 2024. I can't say too much because I haven't read the statement, but from what I have gleaned, as I said, that pretty much was the outcome. Ash will update us on that. I'm sure he's read it. And the market, of course, saw that as positive for the US dollar. And did you trade the breakout, guys? Did you trade it's set up perfectly. It was bang in the middle of that range. And you would have got TP1, should be free trading that. Did I get out of bed to do it? Hell no. I had full intentions, but I woke up too late. It was like 4 o'clock here when I have to be up, and yeah, just didn't do it. But hopefully some of you managed to be out of bed and got into the breakouts. That's just the way it is, I'm afraid. But we did benefit in many ways. The Aussie dollar trade that we're in actually got a good kick, as did Euro Yen. Euro Yen went well. I'm not sure about Euro Swissy. Euro Swissy, yeah, it's coming back to that buy point that we added yesterday. I've left both orders in the market on Euro Swissy. Are you guys seeing my screen? I hope so. Shares, probably not. Maybe I should do that. John, I do have your message, and sorry to hear you haven't been well, mate. That's no good. I haven't been well either. Not physically, but mentally, I've had a shit of a day with cryptos, I can assure you. But as I said, the good news is I have managed to sort it. So with Euro Swissy, it's kind of the only one that didn't do anything at the end of the day. Well, it did. It triggers into the long and then came back and looked like it was going to go south in a hurry. And I decided not to do anything with that because I wanted to see what the 4-hour candles were going to produce. And in particular, if we got to close above the weekly pivot, I would keep the long in place. And that seems to be a good decision at the moment. We'll see how that carries on throughout this session in particular. The reason I did that was because I could definitely see potential here for another higher low. Well, this one an equal low, I suppose, based on this turnaround, and maybe there's a inverted head and shoulders there as well, in which case we're probably going through the neckline again, and a retest of that would get this to be fairly bullish. Have a glass. Yes, I will, John. Trust me, I certainly will, because I've earned one. I've actually earned one. So let's update everything, shall we? There's no point looking at the pound, right? because the pound will be, like everything else against the dollar, just broken out, and there's no range there to accommodate us. There's the breakout trade for you guys. As I say, had you been awake, absolute classic, because here's where the FOMC statement obviously was made. There was no whipsaw at all. It was just bang, and away she went. So, like I said, we were dead set in the middle of the range. Couldn't have been any better. That's an absolute classic breakout trade for FOMC. If you haven't tried those before, highly recommend them if everything's okay. If you've got a 200 pip range, it's not so great, but we had a very, very tight range there for the first 3 days of the week, and away she went. Got to set the alarm though. It's no good in winter for me because it's 2 hours earlier. Summer's okay because I'm out of bed at 6 o'clock, but I'm not out of bed at 4 o'clock. Well, unless my wife twists my arm. I mean, gives me a drink or something late at night. So, what are we doing with euro dollar? Not a thing. I can't make a decision based on that one announcement alone. I don't know if the market's going to follow through on that. If I had the full information on the statement, I could probably make some sort of decision, but really I haven't read it, so I'm a little bit in the dark. From what I have read, not of the statement, but of the press releases, I think the market's overreacted to what they said. But again, as I said, I don't know what they said, so it's very, very difficult for me to say. But if they've only said that previously we've stated that we're not going to raise interest rates till 2024, and they've rescinded that or even remodeled that and said now it's 2023, then I think the market has overreacted to that. That's 18 months away at the very least. So anything can happen in the meantime, for goodness sake. Perhaps it goes to their state of mind. Yes, it always does. But to me, it's a big reaction on maybe nothing. Euro yen. Euro yen's now going very well for us, and I'm really pleased with this one because it's now broken through this level, and it's going to create a lower low, I believe, on the daily chart. Of course, there's a fair bit to go in the day, so anything can happen. You should have taken profit on this, obviously, and you should be free trading that one, looking pretty good. G'day, Scalper Joe. How are you going? Nice to have you on board. Remembering that we traded this little bar here. So this is going to, if this actually goes to where I think it can go, which is down here, this is going to be a cracker of a trade. Really will. It'll, what will it give us? It'll give us 45 pips to be risk, I think, for nearly 300. So a good 7-1 on our risk there. Obviously, we won't bank 7-1 because we've taken profit, but that should be a cracker if it goes to where I think it can. Aussie dollar. Yeah, a bit of a question mark on Aussie dollar now because of the what's it called, those things, unemployment rate that came out in Australia today, 5.1, I think it was. I briefly had a look at that. That's a stellar figure. Really, really good number for Aussie unemployment. And jobs created, I think, were pretty substantial as well, but the unemployment figure itself is the one that obviously the market takes most notice of. And was it 5.1? Yes, it was, versus 5.5. So really coming down. And yes, I know it's a worldwide phenomenon for most countries anyway, most developed countries at the moment. But it's a really good number, and that's why the Aussie hasn't tanked further than it has, in my humble opinion. It's now a bit of a coin toss because unless the Fed have said more than I believe they've said, then rumor, or not even rumor, is it? It's a crystal ball forecast at the end of the day by the Fed. But maybe they said we may go earlier than that. Maybe they did. Maybe they added that. And if that's the case, then I can totally understand why the market reacted as it did. Anyway, as I said, Ash will have more on that when he comes in, I'm sure. What else? That's all we did, I think, isn't it? Yeah, I think we've only had 3 trades this week. Missed the breakout. And yeah, nothing really to do. We could have a look, I suppose, at things like Euro Aussie and Euro Kiwi. Euro Kiwi was one as well. That's why. Now I remember. On the daily chart, Euro Kiwi has, as you can see, since March been in this range, which is very, very reliable. And we've spent a fair bit of time up the top here. Now it looks like we've put in, did we speak about this before? Trading the breakout one candle? I'm not sure if we did on this chart. This is the sort of thing that we really should be taking a lot of notice of. And that is when we do get a clean breakout of the range, it is often the case that these breakouts are false. And if they're false, not so much that candle because it was indecisive, but you could still have traded that, obviously. The one candle false break, but that one is a classic, not quite perfect, but a classic. Because if the momentum to the high side continues, it'll continue on the top of the bar. The buyers will continue there. But if they're wrong, then here's where you'll pick them up underneath that breakout bar. Now, that hasn't proven itself yet, but the second way to trade false breakouts, of course, is to wait for the lower high. And that's what I'll be doing now. That's a daily chart, of course, and probably not looking at that till Monday morning, maybe. We'll see. But the 4-hour charts is kind of getting to the point where I like it. So I'm not sure I like that bar, but if we got back up to here somewhere, maybe retested the top of the range and got a reversal bar, then I'd be quite happy with that. Dolly Yen. Yeah, I hate it all right. Where is it? We spoke about this, didn't we, at length? And I gave you 100 good reasons why I wasn't going to trade it long. And of course, now the Fed stepped in, that's made that folly. But if you'll take note of what we have been looking at, we had a key reversal bar here, another key reversal bar here. So you've got to start, well, you don't have to do anything, but if you're not looking for these key reversal bars, and in particular one on the Aussie, which was superb, then I suggest that you probably do, because they're really good, especially in holy mackerel.
I'm in, mate.
There's a lot of bull.
Oh, hold on a minute. I'll tell you what.
So just to get back to that point, Lewis, look, I think this is an excellent place to trade this from, not long. So I'll be looking very closely at this. And if this sets up somewhere, maybe on a daily as a reversal, then a lower high, maybe on a 4-hour as a reversal and then a lower high, I would be very keen to trade this. But Ash is going to fill me in now on what the Fed actually did say versus what I've read in the headlines. Well, I hope he is.
Yeah, no, I am, mate. And I got really good trade in the Nasdaq. I think that the last section of that is about to close off. It's about to hit the stop in profit. But I still like the Nasdaq for a short. And the main reason for that is that the Fed have. I'm suspecting that you've kind of read that they are projecting 2 rate hikes in 2023, which means that they brought everything forward for their original kind of ideas, which spooked the market, and I think it probably will continue to spook the market. And the only reason that I am moving stops into profit to come out earlier than I think this is going to run for is that I think I think I might well get a better price on the entry.
Sorry, what asset are we talking about?
The Nasdaq.
Nasdaq, right?
Yeah,
yep.
The Nasdaq. So I mean, I can show you the chart. I'm as I say, I'm about to probably close off the last part of it. Now let me see if I can get this working, because I've got I've got this new technique of bringing my screen up here,
Ooh,
and
okay.
I initially had four screens, but I've lost one now. So I've just moved my stop down here now from this particular point. Now I think if we bring in the pivots,
Who was just drowning then?
well, I've got these. I like to kind of have these Epictetus quotes kind of come up on my screen, so I can just kind of remind myself of what
Okay.
headspace I should be in. So it was just a picture. I don't know if it's meant to be him. It's just a picture that somebody's put up. Right, so I've moved this down here to this particular point. Now the reason for that. Now I'm not sure why I don't have the pivots. Where are the pivots? With pivots. Strange. Okay, it's not coming up, but there is a pivot down here. There's a weekly pivot. I can tell you is down there, and that is just suggesting to me that it might well bounce here, and it might well bounce here to this point, which is the daily pivot. Now, it might be that I get a fresh entry from the daily pivot. What I'm looking for is the news and data for today, because with the Fed saying what they've said, it really did smoke the markets.
Mate, is that all they said?
What about, mate?
I mean, they didn't say that they're going to raise them 4 times in 2097, did they?
They didn't say that, but I
mean,
think
what the hell?
Well, I'll tell you what, mate. I'll tell you what I thought was quite notable was all of a sudden they seem to be admitting that this transitory, kind of state of play. Yeah, exactly. I think that
this was the question, wasn't it? This is the exact question we asked ourselves yesterday.
Exactly. Yeah. I mean, the conversation we had yesterday was actually, it turned out to be very poignant, and it's not always the case. But did you get that euro dollar breakout?
Of course I did, mate.
Amazing.
In my dreams. I was asleep.
Oh, you didn't set the trade up then, no?
No, well, I didn't know where the price was going to be. As I said, but it's set up absolutely perfectly.
Yeah,
it was bang in the middle of the range.
Oh man, I was watching it cheering last night because I thought you were in it as well. I thought Jeff and I are making money overnight here. This is great. Now the dollar did, as we know, it got a bounce, and if we bring in the dollar Swissy. That's the proxy, if you like. Really good bounce and a really strong breakthrough, which is one of the reasons that I thought the Nasdaq might well be a decent trade to kind of go for, trade the Nasdaq short. But what was notable was Jerome Powell's, and well, there's a few things that were notable, but Jerome Powell's tone was different. The tone was very almost conceding, conceding that they've probably got this wrong and it won't be as transient. I mean, he still said that there's a transient nature to it, but not as transient as initially thought. That's the first thing. But the next thing was that he believes that the unemployment rate and data will just improve a lot quicker than they initially thought as well, which is why I'm wondering whether today there might be just a little bit of upside as we kind of like wait for that unemployment data to come in, and then we can when we can start trading the Nasdaq short again, which is
did you see the Aussie number on unemployment today? It was amazing.
Yeah, and this is what's making the Aussie a very, very difficult currency to trade against.
Yes, that's what I said.
And I'd say there's a few of them. I think the pound, the Aussie, and the dollar specifically are, and I don't know what the heat map suggests, but I think those three specifically are the ones that will probably do the best out of this. They seem to be kind of coming out of the pandemic and tightening phase. Loosenary monetary phase. Probably quicker than everybody else. I think the euro may continue to suffer somewhat. The yen, it's difficult to kind of make a case for that at this stage as well. Gold, as notably was going to weaken with the dollar strengthening. So all asset classes seem to be potentially on the wane. We saw a pop in the 10-year bond as a bond yield as well. So there are signs and signals that the market is changing. Now, we did say yesterday that one way we could play the dollar is just to wait for a new opportunity. Now, 2023 is a while away, but we do know that that traders and investors will start to position themselves as early as is possible, really, for what's going to happen in the future. 2023, the end of 2023 was touted. And that kind of brings us into that 18-month time horizon that the kind of 6 months, 12 months, 18 months time horizon that I think investors will look for. So you can see the dollar is strengthening, and I think it will probably continue.
It's a long way off, though. Anything can happen between now and then.
Anything can happen. But you know what I think will be notable is looking at those unemployment numbers, looking at the pandemic as well, because it hasn't quite cleared completely. So there could be a situation where we get a repeat of some bad, now some spikes in cases, and then all bets are off. But the way I'm going to be playing it with the Nasdaq, so I think we can look for the short, and it's now just a case of, can you get the best possible price? I don't think I've got the best possible price, which is one of the reasons I'm quite happy to scale out of this for now. But what I'd like to see is the Nasdaq potentially back up here, and then I will go in again. If it comes and tests this area somewhere along the trend line as well, then I'll look for the short again for the Nasdaq. Now, if it does collapse, then what I will do is start adding to the position, because what I'd like to do is trade the Nasdaq down really to the weekly support level. I think there's some room for this to run now, and if we are talking about a 2023 tapering scenario, then there's every chance that the Nasdaq could start to fail at these levels, and we might start to see this drift to the downside. So I am going to look for this particular point and add to it on the way down. And the way that I will play that, and everybody else will be able to do this if you can get the first trade on, the way that I will play that is by putting the position on here and moving the stops to the between point between my entry and the new entry, which means that the second trade is free. Because if it breaks through that level, that's a pretty decent, it's a decent level of horizontal level of support. So we should come down to the next point here. So I kind of hope the trade runs, of course, but because it would take the stress off of having to re-enter. But my overall and overarching state of play is going to be to look for short in equities and look for long dollar, potentially shorting gold as well. I'll be holding on to my longer term investment position with gold, but I do think that gold is going to struggle, and we did see gold take a pretty extreme pop to the downside yesterday, but it does really kind of fit into the inverted head and shoulders.
Nice looking false break there.
Yeah, you like that. So you'd be looking at trade above it.
No. Be looking for a buy bar next, and then sell
and then
it.
trade below it. Yeah, yeah. Now I want to do this as well. So, what's the thought on the dollar yen? I did have I didn't. I sort of had a bit of a crazy night, but it was purely trading.
Lewis, you're smashing it, mate. Look at euro dollar go. Woohoo!
Nice, mate. Yeah, euro dollar is a great one, and as I say, I was cheering you on last night, but
why didn't you ring me or something? Get me out of bed.
I was sure you'd be in this, mate, and that's a lovely distribution pattern going on here as well, and it's a classic. Really, my classic favorite entry point when you kind of look at this. You got you got this now. Was there a possibility to enter on that right shoulder? Let's have a look.
Yeah, it's a beautiful candle on when was it, Monday or Tuesday? I can't remember.
For a 4 hour chart. So this is there was look.
Tuesday, yeah, classic.
Yeah, there was an entry there. Yeah, that is a cracker, isn't it? Look at that on the 4 hour. Lovely engulfing bar there. testing through the trend line as well.
The
Another head and
the
shoulders.
weekly pivots on that high test bar.
This one here.
No, go down a couple of days there.
Yeah.
And retesting that breakout level as well.
Not sure I'm not getting my pivots. Doesn't want to provide the pivots.
Look at that, a perfect retest of the breakout.
Yeah, lovely. You're in euro yen.
Yeah, euro yen was a trade that we took yesterday.
Yeah, it's it just things just look good. You know, if you've got a good entry on this, I don't see why you wouldn't just let this run and aggressively try to get those stop losses. But the other thing with this is that, and this is one of those sort of like situations and scenarios, and you know, obviously I'm not a financial advisor, so I'm not trying to give anybody financial advice with this, but the way I'd want to play it now is to see if I can trade this in the opposite direction than it's been going for such a long time, and this is well overdue. If you could trade this in the opposite direction, back down again, then adding to it all the way down and making sure that you are safe with your additions by moving those stops on the higher entries halfway between entry and the two entries. I think would be a great way to try and play this. I mean, you have to make sure that you kind of enter at the right prices. But if you can now start building into a position with this stuff, and rather than focusing on where can I take profit, where can I get out, rather than focusing on that, see if you can get a good run with this and see if there's a way to scale in safely. Then I think that would be a great way to play this. So if I was in this trade, that's what I'd be doing.
Yeah, I think there's a great opportunity coming up. That bar now, I think, will probably stop pretty much where it is, and then we'll get a buying bar off that horizontal level.
This one here.
You just change
on the daily
on that chart.
Yeah.
No, you're on the weekly, I think, weren't you?
Oh, sorry, mate. Yep.
Yep, pretty much where it is the horizontal level.
Yeah.
Where price is, not where the line is.
Oh, yeah, I see it.
So I think it'll struggle to get through that. And if you put a trend line in from the top high to the high just below it, you'll see that that's broken back underneath. Now come down to the next high. Yeah, that one.
Yeah.
It's now breaking back underneath that.
Yeah.
And if it hits that confluence or gets through that confluence even, then comes back and retests it, I think there's your scaling point there.
Are the horizontals just under here?
Yeah, if it got to there and then bounced back.
Yeah, I'd agree.
Mm.
I'd agree with that. That'd be a great trade. And
then if you go to the monthly chart, which I still haven't placed that order, I better do that. Exactly the same scenario. If you go to the second highest high on the chart, so take your first, up to there. Now come through the high you were at. Yours is different to mine. That's interesting. Hang on a second. Let me see where I've got my trend line. Your chart's completely different to mine. Why? Okay, I see. Now come off the high where you were. Sorry. Down. Next one.
This one
where
here?
You started. Next one down. Yep. And then put it through the high just before the breakout there. Now you've got a clear false break of that as well.
Yeah.
So you've got 3 entry points for mine.
Oh gosh, there's so much to like about this, isn't there?
Mm.
And I like this. I like this trend line here too.
Yep, same thing.
Yeah, I mean that's a primary trend line that that it broke through, and I suppose it's one of those things, isn't it, mate? That there's so much time with this to develop. You know, that the fact that it is 2023, and the end of it that they're talking about. There's a lot of time for this to develop, and a lot of time for things to change, and start moving in the opposite direction for a while to give us some entry points. It doesn't mean that it's all of a sudden kind of going the opposite direction, but I think we've been moving and having this kind of having this particular sentiment for such a long time now. I think moving back again is probably likely, and it might end up being that the dollar, does end up being weaker over the longer term, but because the euro dollar on the monthly looks like a retracement going on right now, and with that inverted head and shoulders, it kind of looks like there's further to run, touching back on this neckline. It could touch the neckline here and then go, and it would be pretty significant as well if it did do. So that could still happen, but I think that there's a short-term opportunity to kind of milk this and try and squeeze as much out of this as possible while it's in play. So it does look pretty good. It does look pretty good from here.
100% agree. Not so much because it's the dollar, but I think the euro's got a problem, and the chart's telling me everything I needed to know anyway, really. And that's sad that I didn't get out of bed, isn't it? Never mind.
Oh, mate, it absolutely is. There's the pound. And if we look at the pound, you look at the pound against the Aussie, pretty flat, really. This is where you start to notice sort of, which is the stronger currency after the dollar's news yesterday. And pound is still up against the CAD this morning, still up against the Swissy. It's just about flat against the yen, down against the Kiwi. So we're seeing sort of like the Antipodean sort of currencies doing pretty well today, relative to everything but the dollar. The pound is still pretty strong. Then it looks like it's the yen in next place, CAD after that, and then we're seeing the Swissy and the euro underperform, and particularly the euro. That isn't that surprising. When you kind of break down the data and the fundamentals, everything is kind of probably in just about the right order right now. The pound may sort of hop above the Kiwi or the Aussie in the coming months, but those two are probably going to vie for that particular position. But everything kind of makes sense at this stage, on the fundamentals anyway.
Yeah, look, as I say, I'm yet to be convinced that that's sustainable short term, that particular news. But I want to read the statement and see if I can just glean. But the explanation that you've given thus far, so I keep turning my camera off. The explanation that you've given thus far is probably enough to suggest that today is going to be exactly not a repeat, but they'll continue to do what they did yesterday after the Fed announcement.
Do you know, mate? Do you know what was interesting and what you may not get when you read the statement was the tone. The actual way that he was speaking. It wasn't just the words; it was the kind of way they were delivered. It was kind of. There was almost little there was almost very little attempt to appease the market, which is what the Nasdaq will not want Jerome Powell to be talking up the economy and talking about potential tapering, because it does mean that those growth stocks will potentially suffer. But there didn't seem much attempt to kind of taper the fact that, or to temper the fact that the markets will probably sell off a bit from what he says. It still might be a bit early. We still might see some pushes to the upside with the S&P and the Nasdaq. But I think on the whole and overall, what was being said was we are in a change period and get ready. Start kind of positioning yourself, because this is coming. We've given you a kind of nice long run up, but maybe start shifting positions out of growth and going for more value, out of tech and going to banks. It's not that the money's going to come fully out of the market, but it's probably going to change in the sectors that it's currently invested in. And this is where I can see the Nasdaq suffering somewhat.
You're keen on that, aren't you?
I am, mate. Yeah, I am. And the other thing that I thought was also quite notable was what was going on with the crypto market, because the crypto market, I think, is arguably in the same kind of situation, and because these are the sort of like all the jigsaw, but the pieces of the jigsaw puzzle that I'm trying to kind of put through my mind and figure out, because we have the stimulus checks, and the stimulus checks seem to go into heavy growth and seem to go into high risk assets like Bitcoin and the crypto market. If inflation is on its way, potentially meaning that that the banks will do well, bonds will probably sort of, bond yields are going to start paying something back as well. Will people come out of risky assets, and does that risky asset, is Bitcoin and cryptocurrencies classed in that, or are they actually a better kind of like place to hedge against inflation, because you're still getting a dividend yield off the crypto space?
Did they react off the Fed news or not?
Not as much as I thought they would, and I think that was one of the notable things. Bitcoin is actually in a pretty sexy buy zone. It looks pretty good from here to push higher.
Of course, the biggest news of the week on cryptos is on anything really. Forget the Fed. The biggest news is I managed to stake my my Casa.
Oh, you did it!
Yay! It took me 6 hours today. And
well
not
done,
joking.
mate.
6 hours. I tell you, crypto was nearly erased from my vocabulary.
Yeah.
By the time I actually got it done, just ridiculous.
That's really good to hear. This is the Bitcoin chart, and you can see that there's a pretty nice breakout here. Pretty nice breakout point here, and it's come back and kind of retested it. Gap there is because of the weekend. But that does now look like it's going to be stretching its legs to the upside. You could still make the case for downside. It looks like that could be a left shoulder, could be a head, could be a right shoulder. So you can still make the case for the downside, but you could also make a case for some short-term upside, which could turn into long-term upside. And I suppose this is where I was watching this with some fascination last night and thinking, how is the market going to react to the crypto space? Because we've seen obviously the Nasdaq take a bit of a hit, which could end up being a bit more longer term, but not, you didn't really see the crypto market do anything. I didn't think it was that notable. It came down a bit, but not really. Looks like we're almost back to where we started before the announcement was made.
Interesting.
Yeah. But that's about it from me. I mean, I'm going to be closely watching the equities, because I think that the equities now all of a sudden become much more as an attractive short. I think that there's a few different ways to play them, and I think one way would be to short the Nasdaq, long the Russell. Or maybe even short the Nasdaq, long the FTSE, because even though they might both suffer, I think the Nasdaq's more likely to kind of come down harder. You could just play the Nasdaq short and see if you can add to positions. You could play a dollar long, euro dollar long, maybe dollar Swissy long as well.
Euro dollar long,
euro dollar short, euro dollar short,
okay.
Euro dollar short. Pound,
hang on, he's just changed his mind in 3 seconds.
Yeah. Or you, again, I think you could hedge out that position. It's a bit more risky, but you could potentially do a euro dollar short, pound dollar long, if you think that. But then you're kind of trading the pound euro, so it kind of negates the trade a little bit. But I think there's ways to play this, mate. I think there's ways that you could play this, put a bit of safety in play. Don't risk the house on it to start with. I think the Nasdaq particularly has been in a decent enough run to have some relief to the downside. And if that's the case, then what you could also do is just build into the position very, very small stops at the high. Looks like we've got a rising wedge on the weekly. If that was to break down, then the Nasdaq's coming down quite a lot more, and that would be a great scenario. But I think taking profit here, adding, taking profit there. If it goes through, add back in again and start it all again. Because as I say, if that was to break down, then we're coming down to this level here probably, which is around about the 1200 mark. And it would seem ridiculous to be coming down what would effectively be 18% on the Nasdaq, but
Well, well
it's
and
probably
truly due,
overdue.
isn't it? Absolutely.
Yeah. So yeah.
As is, that's why the yen pairs look really attractive to me, and have looked really attractive to me as well. It's why we're in euro yen at the moment. We said last month that it would be highly unlikely to get 7 months in a row of euro yen buying. In fact, I couldn't find on my charts a single time where that's happened before, yet it happened. So the more likely it is not to happen this month, in my humble opinion. Doesn't mean it won't, and of course it can, but this could well be a good start to a big retracement on euro yen, and I'm hopeful that's the case, and I'm very glad I'm in that trade at the moment, free trading it. I'd be even more impressed if I was like Lewis and was in euro dollar as well, trading that one also, which is my own silly fault that I'm not. But there'll be other opportunities, as you're saying. I believe we need to get today out of the way, maybe even tomorrow out of the way. And if there are to be, I'll use the word retracements on the move yesterday, then let's get those out of the way. If there's going to be a complete reversal of that, then let's get that out of the way also. But that seems unlikely in the near term. But I think retracement, it does seem likely to me, whether it's today, whether it's tomorrow. As I say, let's get that out of the way and have a good look at it on Monday. And if we do get retracements, maybe they're the opportunities that we need.
Yeah. Yeah. Lewis is saying about the Aussie yen finally moving to the downside.
Yeah, I noticed.
It looks like it has, doesn't it? It looks like it's managed to get a bit of a shift on, and I might have come out of this a couple of days early, but I have to say, it was starting to do my head in, and I wasn't enjoying it. And I do kind of want to enjoy my day. I want to enjoy my day. I want to enjoy my night sleep and everything else. So,
exactly.
So I think coming out of it from my perspective, from a psychological perspective, was right. Coming out for it from a financial perspective, I think probably was not right. I think that this does have a chance to break down, and maybe break down quite significantly. But as you rightly said earlier on, the numbers from Australia are still pretty good. I think
it difficult.
It does, and the Aussie looks to me like it's reacting off what the Fed said rather than what was going on in the nation. Its own nation.
Well, you had the knee-jerk reaction, as you always do when a really good number's posted, but then it came off very quickly. It came off the highs very quickly.
Yeah.
And that goes to exactly what you're saying. That's what the market's reacting to, rather than the really good numbers out of Australia. What might be interesting is pick a weak currency and trade the Aussie long against it. But that's not the dollar at the moment, and it's not the yen at the moment.
The thesis by Ainsley was interesting, Lewis. You're right, mate, because that was talking about a Nasdaq short position, on Monday, and we do still need to take into account on drivers. We're sort of focusing a lot on what's going on with the market, but let's focus on a couple of drivers as well, and see what's going on. Now, yesterday, we had, just for anybody that's not aware of this and what's been driving the market, yesterday we had FOMC projections, we had the FOMC statement, and the federal funds rate. Federal funds rate was left on hold, but the most notable thing was what Jerome Powell said after or during the statement, during the press conference, and he was pretty bullish on the stock market. And when he was pretty bullish on the stock market, he was also pretty bullish on inflation, and he was also pretty bullish on employment. So when you start putting everything together, it would suggest tapering. Then he started to announce about the tapering. In fact, the tapering was announced in the original statement release, which is why we got the big move down with the Nasdaq and big pop with the dollar. And they're talking about tapering at the end of 2023. Now, that might seem far enough away not to worry about, but traders and investors, certainly investors, will be starting to look to position themselves between really, traders will look a 1 month to a 1 month to a 3 month time horizon, and maybe longer if it's available. But investors will pretty more likely look 6 months to a year to 18 months to to beyond that. But the way that the news and data comes out, and the way that how fast the market moves, 18 months is a pretty decent time horizon to be looking at getting into stocks and holding on to them. We are within that 18-month period. We're looking at 2023. So 12 months obviously gets us into June of 2022, and another 6 months after that gets us into 2023. So and we could be looking at another 6 months on top of that before they start tapering. However, I think what's probably happened is the inflation data has spooked the Fed so sufficiently that they're having now to change their stance. And maybe what investors are reacting to is the fact that if this inflation becomes more than a little bit transitory, which the Fed rode back on that, then they might have to change their stance again, and we might be looking at interest rate hikes in 2022. And also, if you start buying bonds now, you're going to get a much better price than if you start buying them later on. So you're going to get a better yield. You're going to get a better yield return. So there will be some movement with that. If you start trading in the bonds now, you're going to get a much more favorable market condition. So and also you might start getting a better market condition in some value stocks over those growth stocks. So it seems to be that there could be some movement between one thing or the other. Now, what Jerome Powell also said was that they are watching the unemployment data quite closely, but they do think that the unemployment data is improving, and it's improving pretty fast as the economy opens back up again. So the economy having a bump in the road from the pandemic might put all this back to where we were. But what we're really looking for is the employment numbers. Now, that brings us on to today, where what we have is unemployment claims from 1:30 from the US. So we're looking at that. You want 1:30 UK time. So these are the sort of things that you can start now plotting your roadmap to say, when will I most likely get triggered into a trade that's going to run? Now, here's one time. Okay, we're likely to get something going at 1:30 today. Probably in the US market as well. There might be some add points. There might be some entries there. Depends if you're in the market already. Nothing notable tomorrow. And then we flip to next week. Let's see what we got until the end of June. Nothing notable. Existing home sales doesn't fall into the employment category. Flash PMIs. This could fall into the employment category, depending on what the statement says with that. None of this will be of any interest because it's all consequential. Core PCE price index. So really, next Friday is when we get another and revised University of Michigan's consumer sentiment. So the consumers are obviously going to be important with this stuff. So next Friday, we're sort of like starting to map out and say, we've probably got something today. There's probably an opportunity today. The next best opportunity to either turn things around or add to a position looks at this stage like it's going to be next Friday. So that's what you can now start doing, having a look at what's likely now to drive the Fed to a point where they might have to come back even further, employment and further inflation numbers. So that's well worth kind of going along your time horizon and ticking off when those things are to be released. Anyway, mate, sorry, I'm going off on a bit of a tangent here because we need to get to the quiz.
Well, actually, John can't do the quiz today. So
okay.
You must have missed that message earlier. He hasn't been well.
Oh, no.
So, yes, he's absolutely excused from the quiz today, and we will not be having a quiz today, unless, of course, you've got a question you would like to ask everyone. And I can go back to the 4 C's, of course.
Yes. Well, let's go back to the 4 C's.
Let's go back to the 4 C's.
Can you do a recap of why we were talking about the 4 C's?
Well, we're talking about the 4 C's because really that's what's been driving the market for, let's say, 18 months, There's a hint.
Okay, John, mate, it's honestly no worries at all, buddy. It's
No, of course not.
it's a bonus. The quiz is a bonus. It's not an essential. The Four Seasons, it's been driving the market for the last 18 months. Okay.
I'll share screen, shall I?
You share screen, mate. Yeah, let's have a look.
And I'll give you one.
Okay.
Okay.
I was going to say not if I still have my strength, but that might have been over the.
Okay. Lewis has got one. Lewis is good. I'm looking at this because I'm in 14 minutes and 10 seconds looking to trade Aussie Kiwi long.
Oh, okay. Yeah.
But I've got to get the right price action here before I do. Okay, so crypto's right.
Crypto's right. Okay. All right. Well, you got to give us one. I don't. Commodities.
Don't be ridiculous.
That's
like fundamentals.
Okay. So crypto's one. Choices, chances, changes, COVID. Oh, COVID. Very good. Yeah.
COVID.
Okay. COVID is B. Currencies, Lewis has said. Is that too obvious?
Yeah.
Too obvious. Okay, so we've got COVID, we've got crypto. None of them are cryptic, are they?
No.
They're obvious. Okay.
None's a swear word either.
Central banks.
No.
Oh gosh. What's everybody else put? Choices, chances, changes. I mean, so it's a lovely lovely little thing to have on your gravestone. Choices, chances, changes, COVID, crypto.
I'll give you some clues.
Yeah, give us some clues, mate. Not currencies, not central banks.
Oh, bugger damn.
Contrarian. won't be that.
We can write a book on this.
Commodities. I had commodities. Copper. Nice. That's got to be one.
Copper drives the copper market.
Okay. China?
Hey.
Okay, China. Oh, I like that. Okay. China. Okay, so we got China, cryptos, COVIDs, trade, not trade. Not central bank. I'm surprised you haven't got central banks in there. Oh, what's that?
Well, really, they haven't. They've all been pretty lame.
That's true.
Up till now.
Oh, what's that?
Only one to go, guys. You're nearly there. Crypto, COVID, China.
On that one, it's like Hangman. Oh, can we have a bit of Hangman then?
That'd be too obvious. Is
there an O in it?
No.
Okay, you have to draw a little line then.
I'll see if I can draw a hint for you.
Is there another H?
No.
Is there an A?
Yes.
Okay. Something to do with the weather.
Where'd you get that from?
Climate. Got it.
Yay!
Okay. Oh, Paul had it before me. Okay. Climate. Nice.
Good on you, Paul. You got it right. So you can probably add to that, and there's a good idea. We could expand our NFT on the 4 Cs and make them 19,000 Cs by the hints that have come into the box. Good one, guys. Well played.
That is interesting, mate. Actually, because climate, and if you sort of think about this in investing terms, everybody knows what's happened to the crypto market. Been a great investment for the last 6 months, and probably will continue. COVID has been a good investment for all those people that managed to get into tech, like things like Zoom, and Netflix did really well off the back of that. China, I'm struggling at the minute to make a complete case for the investment, but certainly.
Well, China and America have been having trade wars. China and Australia have been having trade wars.
Yeah,
China and China and everybody being having trade wars. So I believe that's something.
I wonder whether, actually, looking at that, I wonder whether climate, though it has been in the news somewhat, I wonder whether it's been as big as it should have been. I wonder whether it's taken a bit of a back seat over the last
indeed,
12
it has
months.
taken a bit of a back seat because of COVID.
Yeah.
And because of China and because of cryptos, that's kind of been the big three, in my opinion: crypto, COVID, and China. But climate's certainly in there.
Climate is, and I suppose when it comes down to investment opportunities, I think with the climate thing, you're still looking for opportunities that will return genuinely in the next 10 years. There's lots of oil companies. There's a lot of oil companies that are making the transition, BP and Shell, as an example, over to clean energy, and that's going to be something that will be interesting in the next 10 years. I would have thought.
Absolutely, Lewis. I think I said that to Ainsley last week, not this week, but last week, and I agree with you 100%. Looks 1,000% sentiment cycle to me. The gold.
Oh, what's that? Gold.
Yeah, you want to have a look at it, Ash?
Yeah. Let's have a look.
LT, you were close with cash, but no cigar.
Where's gold? There we go.
Reason I'm looking to trade Aussie Kiwi along is, well, twofold really. It's let me get rid of. No, I'll keep that trade line. Might even be threefold. If you have a look at, is it the daily chart? Yes, daily chart, where we have repeatedly refused to come back below this trade line. 1, 2, 3, 4 times now it's been rejected. And weekly pivot ditto. There's a horizontal level through there as well. There's a horizontal level through here as well. They're not strong. They're not key levels, right? But they're there. And I believe this is going to take off to the high side. The other reason I like it is on the 4-hour chart. Yeah, not really a great case, but on the hourly chart that I was on, I can clearly see a range. Let me just draw it in with I can see this range in here. And I can see 1 little, 2 little, 3 little, not real little, 3 little what, guys? False break, false break, false break. Anybody going to have a crack at what those 3 little ones are? Thank you, guys. But we can't call them Indians because the Indians are up here. The Indians are on the high side. We're going to have to call them 3 little cowboys. Miners, call them whatever we like, really.
I think the Cowboys works well, mate.
Cowboys? All right, we'll call them 3 little cowboys. And when that happens,
also does work, because they're digging down. I get it.
Yeah. When that happens, you generally get a break to the opposite side of the false break. So I'm thinking that way. And this may be a great opportunity to get into it on a hourly chart. Now, if we just need this bar to be, if it closed down here, I'd be really happy. It's got 5 minutes to do that. Actually, if it closed there, I'd be happier because it's retesting that and giving us the clear false break off this trade line as well. I'll have to see a black bar here to trade it, though. Otherwise, let it go and then come back. either way is fine. But I'd love to see a black bar now because I think that'd be great. All right, mate. Sorry, I just that's why I'm on that chart waiting for that to happen.
Not a problem, mate. Not a problem. Okay, so let's have a
As it
look at
goes to what I
gold.
said before, pick a weak currency and trade the Aussie long against it. I can't find too many weak currencies at the moment, other than the Kiwi.
Yeah, well, yeah, I guess the euro as well would fall into that category, wouldn't it?
The euro would. I don't think I've got a setup on the euro, however. Yeah, I haven't. Well, I might have later if we get through there. If we get through there. No, I haven't. I haven't. Too dodgy where it is. So Aussie Kiwi.
There we go. Sorry, mate. I was just
Right.
making sure I could share that. Okay, so we are going to look at this, and now what we want to do is look at it in relation to the sentiment cycle. Okay. Let's have a look. I haven't really now where's my favorite? This is my favorite one. Make sure it's big enough for that looks bigger. So we have this as our sentiment cycle. So Lewis, what are you saying, mate? Zoom down until you can see 2008. Okay. All right. Let's do that first. (2008). Okay. Yep. Subra, I will get to that in a moment. I will get to that in a moment. So, okay. Now, what are we? So, look at the high in 2008. Okay. The high in 2008. This one here, right? Yeah. You want to come on, Mike, Lewis?
Interesting that you're seeing what you're seeing, Lewis. I'm seeing something on a different time frame, but by all means, love to see what you're seeing.
August 2011. Yeah. Okay. Which is here. Yeah. Okay. Yeah. That high there. I see what you're saying. Yeah, I see what you're saying. So you're looking at this being enthusiasm, the first enthusiasm. Then we came down and saw the disencouragement. This is the wall of worry. This is the wall of worry. There's the aversion trade there. We go up and we get denial here. I'm presuming this is what you're talking about, and we get returns of confidence. Comes down, enthusiasm, and then bang down again. So you're in the enthusiasm phase. Okay. All right. I'm just going to roll the aversion trade. Sorry, the picture next to this, so everybody can see it. So what Lewis is talking about. Let's see how.
And there's probably not a better asset class to look at for sentiment cycle than gold either.
Yeah, you're probably right, mate. So this is what we got here. So this area here would be this: return to confidence, buy the dip, enthusiasm. Return to confidence, buy the dip, enthusiasm, and then we fall down and we get this panic here. Comes up, discouragement here, and then we're going to roll along just a little bit.
Yeah, it's a perfect example. Love it.
It's
Well
very good,
spotted,
Lewis.
Lewis.
Yeah, it's very good. And then we bring it over here. So we're here, discouragement. Then we get that all this going on. We get this wall of worry here. This is the point of the wall of worry here. Anxiety, aversion pops up. You get the denial, and that's
Perfect,
just
isn't it?
before breakout. Yeah, there's denial, and then bang, return to confidence. So this is the return to confidence in a way, and that's back here again, which would suggest buy the dip. Maybe it's this. Buy the dip. Enthusiasm. Yeah, I got you, mate. Gotcha. Now, according to the sentiment cycle, it looks like enthusiasm would tend to break through the return to confidence. So yeah, man, you might be right on the money with this.
If you have a look at the daily now, that'll back that up. I think you'll find where Lewis is thinking, and I'm thinking exactly the same thing. So that cycle's completed, in my opinion, and we're now in the overt warning scenario.
Very interesting, mate.
We've had the subtle warning. Now we've got the overt warning.
Yeah. Yeah.
Looks good, doesn't it?
Does look really good. Yeah, looks really good. I'll tell you what, I mean, this is the, you know, I mean, I know we always talk about it, but this is where I really love this show, is that you get somebody else's perspective on something and it changes your view. Because I have to say, mate, I wasn't there at all. I still think that there's a potential for the inverted head and shoulders to play out and move a bit higher again. But I make you right in as much that maybe we shouldn't be quite as bullish on gold. Maybe we have come to that enthusiasm point, and we're now about to get the turn back down again. And where that would fit actually is really well with Bitcoin, maybe taken over as the preferred asset class currently of the inflation hedge or the protection of wealth choice. Yeah, man,
Yeah,
I
look,
love that. Really cool.
as we all know, nothing works 100% of the time.
Yeah.
But it's beautiful to have that point of view in your brain, because if nothing else, you get the opportunity now to see the potential for the other side of the way you think. And I agree with you, Ash. That's why we started the show in the first place, so we could have these little discussions around, well, okay, is what I'm seeing really what I'm seeing? Or should I be so bold or so bullish or so dovish or so whatever? Is there another point of view? And often there is.
Yeah. Yeah.
Love it, Lewis. Thank you.
Yeah, absolutely brilliant. Yeah, thank you very much, mate. It's that kind of thing that keeps us keeps our powder dry. And I tell you, the thing is, you know, if you write a trade plan, when you're sort of like thinking about, and this is really for you as well, Subra, when you're sort of thinking about your trade, when you're thinking about putting your trade on, you should always list the plan. Buy here to, you know, to kind of like take profit here and do, you know, for let the trade play out. But on top of that, you should risk what could happen and do both scenarios, because they can all, you know, either scenario could happen. It could go up or it could go down. If it goes up, where's it likely to go to? And that means that, do I have a decent place for a stop? Is it worth taking the trade? If it goes down, if it's in your favor, where's it likely to get to? Is the risk to reward any good? So it's this kind of thing that when we look at it, okay, we've had the bullish case for gold for quite some time, but actually I haven't really heard anybody mention this, you know, this bearish case for gold. And okay, the sentiment cycle's only one part of the jigsaw, but it is a fascinating one, and I think it's one that we should also kind of like have in our back pocket, because to be fair, we may well now have the catalyst to drive gold lower if that dollar is to pick up you know, further pace and keep going. Now Subra's asking, please advise what percentage risk on gold trade should one take? Okay, so now
You mean lot sizing, Subra?
Yeah, and this is one of those things that is impossible for me to answer or Jeff to answer, because we're not financial advisors, so we can't tell you what to put on per trade. And it's difficult, but when you're starting out, because you know what you're looking for is answers. And when someone like Jeff and I say, oh, we can't really tell you, what you should put on, it doesn't really help you. Yeah, quite confusing. Yeah, I totally get it. Totally get it. So what we've got to try and figure out is how to help you without really putting ourselves at risk, because what we can't do is kind of offer an opinion that makes it sound like that's what we're saying you should do, which is number one, illegal. And number two, if we're wrong, then, we may fall out pretty quickly. So, So what we're going to need is to think of the best way to kind of approach it with you. Now, the first thing I'll be thinking is, where are you in your journey with trading? How big an account have you got? Where is the account, in as much that, have you lost 30% of your account? Because if you are continuing to lose, the first rule of thumb is that you should be reducing your risk. If you're on a bit of a roll, then feel free to start pushing that risk up. So the first thing you've got to do is answer some questions, before you can think about how much should I put on per trade. Where are you on your journey? And remember, this is a journey. It's not kind of like we're going to get in the car and arrive on a trade by trade basis. This is something that we're trying to do longer term. So look at whatever you're about to trade on a longer term view, and as an investment opportunity and as a learning tool, and you'll be fine. And if it's a learning tool, my personal favorite thing to do is just don't use leverage. I don't know how big your trading account is, but if you don't use leverage, then how can you get stung? You can still come out at sensible points. It's an ATW account, okay, but is it a big one? And
have you got the trade manager, Subra? Because the trade manager, if you've got the trade manager, that'll sort that out for you. You just risk the percentage of your account, whether it's an eighth, a quarter, a half, or 1%. Then the position size should be calculated by the EA.
Not using that, but Lewis has given the calculation there, mate. 0.01 lot in gold is every $1 move. So if it goes from 1810 to 1811, it will be a $1.32. So if you've got a $10 stop loss, so let's say that this is my gold trade here. So I'm going to take this on the hourly, and I'll just pick the numbers out. Let's say that's where I'd want to enter, and I want to put a stop at the low there. Then the first thing I need to do is figure out where my entry. Just write this down. This is the entry here. Oops. We're going to say that's the entry. There's the stop loss. Entry is at here, 18. I'm going to round this up. So 26, I think that is 1826 for the entry. Stop loss, 1804. So that minus that is 22. So that's a $22 difference between the entry and the stop loss. And then Lewis is saying that for every dollar, it's 132. So it's 18 times 132. Sorry, it's 22 times 132, which is going to work out at 22 plus 660 plus 440. So it's going to be going to be something. I don't know if this is right, mate, but let me know if it is. Is it $28, $29.40? Is that right, Jeff?
Sorry, mate. I'm doing something else. What are you trying to work out?
22 times 132.
Oh, hang on. I haven't got a calculator. Yes, I have. 22 times 1.32. Equals 2904.
2904. There you go. Okay, so it wasn't. I forgot the zero. There we go. Close. I was close. 2904. So that's what it's going to cost you. $29.04. Oh, thanks, Lewis.
Mate, just before you go, I have placed a long on Aussie Kiwi.
Great.
107.79 is the entry. Stop loss 107.69. And
long
TP
Aussie Kiwi entry
107.79.
0.79. No.
Yep. 1.0779.
Yep, sorry, mate. 1.0779, yep.
Stop loss 1.0769.
Okay.
TP1 1.0785.
1.0785.
85.
Okay.
Not a massive risk on that either. It is at a strong level of resistance, so just be careful with that if you're going to follow it.
Okay. So does the calculation there make sense to you? What we're doing is we're basically timesing the distance between here and here is $22, and we're timesing that $22 by 1.32, because each dollar costs 1.32 to your account, each dollar movement. So now you need to work out, if you've got an account, now you need to work out what percentage you want to put on the trade. Now, 1%, if you're starting out, is kind of high. Yeah, with 0.01 lot, it's going to cost $29.04 for this particular trade. So whatever it is in the dollar amount, just times it by 1.32. And you'll know how much it's going to cost you, and then you need to work out how much you want to go for. But no problem. But 1% is quite high, I think. If you're sort of like starting out, you don't need to risk that much. I think the most you should risk when you're starting out is 0.5%, personally, just to give yourself loads of room for error. Lots of trades, Okay, fantastic. Well, anything else you can think of, let us know. I'm not sure who that is. Okay, mate. Well, I think I'm pretty much done. I don't know if you are done too.
Yes, mate, I am. I've updated all the trades that we're in. They're all going well. We've now got a new order in the market. A little bit of a scalp, really, at the end of the day, but let's see how we go. If we can get that first take profit at the daily pivot and we can actually get through there, this may be a decent trade to be in as well. So,
yeah,
all good.
Great. Good week it's been. Okay, fantastic, mate. Well, thank you to everybody as always. Thank you to you. And as I said earlier, this is why I love Trading Buddies, because we get sort of insights that Lewis has given us, and also questions that should be asked may well help other people out too. So it's all really valid.
Yep, 100%.
Thank you to Angel for looking after us this week, as always, and we will be
got
back.
A countdown back too. She did. She'll be very happy with that.
She got a countdown.
Yeah, the countdown hasn't been working all week.
Oh, right, okay.
Oh, you're not in it. You're not up at that time of day.
I'm still sleeping. Okay, well, have a great weekend, guys. Enjoy yourselves, and we'll be back Monday, same trade time, same trade channel.
Indeed. Happy weekend, Trading Buddies, and bye-bye.